Global tensions, economic signals, and political shifts shape the international landscape. As 2026 moves deeper into its first quarter, global politics and economic pressures are intersecting in ways that are reshaping alliances, markets, and domestic debates across multiple regions. In the United States, political attention remains divided between foreign policy challenges and domestic economic performance. Washington continues to manage elevated tensions in the Middle East, while lawmakers debate federal spending priorities and long-term debt concerns. Economic indicators show mixed signals. Consumer spending remains relatively stable, but inflation pressures and interest rate policy continue to influence business investment decisions. Analysts say the Federal Reserve faces a delicate balance between sustaining growth and preventing renewed price instability. Across Europe, governments are grappling with energy diversification and defense coordination. Several European Union member states are accelerating investments in renewable energy and regional security frameworks, partly in response to geopolitical uncertainty and shifting global power dynamics. Defense budgets in multiple NATO countries have risen again this year, reflecting concerns about long-term regional security commitments and the need for stronger collective deterrence. In Asia, competition between the United States and China continues to define strategic planning. Trade negotiations remain cautious, with tariffs and technology restrictions still central to bilateral tensions. Meanwhile, China has expanded regional partnerships through infrastructure investment and supply chain agreements, reinforcing its economic footprint across Southeast Asia and parts of Africa. Market observers note that global manufacturing patterns are gradually diversifying as companies seek resilience rather than reliance on single-country supply chains. The Middle East remains a focal point of global security discussions. Diplomatic efforts aimed at de-escalating proxy conflicts are ongoing, though fragile. Energy markets are watching closely, as even minor disruptions to shipping routes can influence global oil prices. Several Gulf nations are also investing heavily in economic diversification projects, attempting to reduce long-term dependence on hydrocarbon revenues while maintaining strategic security ties with Western partners. In Africa, political transitions in several countries are drawing international attention. Elections, economic reforms, and infrastructure development initiatives are shaping new partnerships with global powers. Development banks and private investors are increasingly focusing on digital infrastructure, agriculture modernization, and clean energy projects across the continent. Technology continues to move at a rapid pace worldwide. Artificial intelligence regulation has become a prominent topic in Washington, Brussels, and parts of Asia. Policymakers are attempting to balance innovation with oversight, especially in areas such as cybersecurity, data privacy, and automated decision-making systems. Major technology firms are investing billions into AI research while also facing regulatory scrutiny over market dominance and information governance. Meanwhile, global financial markets remain sensitive to geopolitical headlines. Investors are closely tracking central bank decisions, commodity price movements, and regional conflicts. Although recession fears have eased compared to last year, uncertainty still shapes investor behavior, leading to cautious optimism rather than aggressive expansion. Taken together, the current global environment reflects a period of adjustment rather than outright crisis. Nations are recalibrating alliances, reassessing economic dependencies, and navigating technological transformation at unprecedented speed. The coming months will likely determine whether this phase produces renewed stability or deepens competitive divisions between major powers.